Hey, what's going on, guys? Welcome back to Kiwin Learning, and this is Stock Picks. The stock we'll be going over today is PennyMac Financial Services Incorporated. And, usually when I come up with these stock picks, they're usually throughout articles from either Zacks or Seeking Alpha on the day that I'm actually doing the stocks. But I wanted to try something different today and use the screener in FinViz, and you guys can do this yourself as well. So here, I just want to make sure fundamentally the company was good, and I did a PDE ratio of under 25, return on equity of over 30%, which I really didn't think there's going to be many companies for. Then a 4 PDE of just greater than 0, which is just profitable. PEG ratio of under 1, PDS ratio under 1, and P to B ratio under 2. So everything we've covered in previous educational videos, and I just wanted to basically put this onto a screener. And so after I put all this onto the screener, it came out with three companies: Cohen Incorporated, Coppers Holdings Incorporated, and PennyMac Financial Services. And so when I was looking at Cohen and Coppers, I didn't really like, where they were priced at right now and thought they were slightly overvalued. But then I got to PennyMac, and I was thinking like, this company looks really good right now. They had pretty good in terms of just technical analysis. These are their moving averages: 20 moving average, 100-day moving average, and 150-day moving average. And basically here, it just shows that they have really good levels of support here around the $61, $62 level. And so I was thinking, okay, if they match all of these different things I was saying before, they could potentially be a really good company. And going back to a little bit more of their fundamentals, when I finally looked at the return on equity, which we covered as a really big thing in all our stock picks, they have a 58% return on equity. And that's just crazy, right? Because typically in a good stock, as we covered before as well, it's 15 to 20%. And not only do they have a really high return on equity, but they also have a 1.26% dividend yield, which is just another bonus to what I really think is just a really good fundamental company. Only thing that I did not really like about them is that their free cash flow was negative, but when I was looking at past years and what they were building up on, I do like that they are negative right now because that means they are spending their money to try to basically engage more of their mortgages and things like that. So PennyMac's also in the banking industry, and as I was saying before, why I think this company will do really well in just this time period over the summer and into the fall is that mortgages usually based off, housing. And housing market has been doing relatively well right now. And when you think about it, most of the time when people move into new houses, they have to pay a mortgage because most people don't have the money to pay down their full houses. And so when you really think about people moving, though, you usually think about the summertime. And so I think this quarter will be extremely good for PennyMac. And I just one of the other reasons why I think this company will do really well, especially in the long run. So just going over this though, fundamentally they look really good. And now I just want to go over to just, tip ranks, the one we always go to. And tip ranks, 27% upside, 7 different ratings, put it at moderate buy. And so, as we've always covered before, it's one thing for tip ranks to say it, but it's another thing for, other scanners and other things to say as well. When I went over to Yahoo Finance, they say that PennyMac's undervalued by 157%. I don't think it's 157%. I think 81 is a fair value for them. But just going to show how tip ranks, even though they are on the more bullish side, it just shows Yahoo Finance is basically blowing them out of the water. Now, another thing that was a little bit concerning for me about this company was their earnings, right? So last earnings, they had a higher estimated than they were reported, and it was minus 11%. But the 3 quarters before that, they've always beaten it out. And I think it's just because of how well the housing market was doing and what, the overall market thought they were going to put up. But for them to have this next quarter to have a report EPS of 3.66, I think this is way too low. And I think they will basically just beat this by at least 20-30%. Now, one thing that was really interesting about this company was that, because we didn't have that one of those articles to go over, we wanted to go over maybe insider trading. And what we found that was really interesting was this guy named Farhad Nanji. Maybe butchering the name, but he's a director of PennyMac, and or at least one of them. And something that we found really interesting about this guy was that just in this past year for the insider trades, I mean, not even past year, we're talking about March, so about 3 months ago, he has put in around 23 to 24 buy orders for PennyMac. And we're talking not just, 100, 200 grand, but we're talking about millions of dollars being put into this company right here. So this insider trading is really interesting because I want to do some more, you know, background knowledge on how Mr. Nanji was overall trading and how he even got to such a high net value. His net worth right now is around 229 million, and how much money he has into this company right now is 217.5 million, and that's just himself. But if you also look here, you also see MFN partners, also really weird because in the past few months, they seem to be the only other people with Farhan Nanji to be buying PennyMac, at least in terms of inside trading. And we were looking at MFN partners, and we see that Farhan Nanji is the co-founder of MFN partners. So not only is Mr. Nanji the director of this really large financial company, but he's also basically a co-founder of a hedge fund. And a hedge fund, mind you, that has done extremely well. And right now, you can see that PFSI, PennyMac, they have a higher holding of PennyMac than they do even Alibaba, or they do a few other healthcare companies. And so I was thinking this is just really good because for someone to have done so well in his life, just overall, MFN Partners since 2018 actually has almost gone up 100% just as a hedge fund. So I thought this was extremely good, and even through COVID, they did extremely well. And for a person to have put so much money into this company, I think there's definitely something to be based off here. And just one other piece about Mr. Nanji was that he also worked for Highfields Capital Management for at least 2006 to 2015. And during this time, they actually only lost money over these 20 years, 1998 to 2018. They only lost money in 2 years, 2002 and 2008. And those were the only 2 years where the market did extremely negative. And 2002 S&P lost around, I want to say, 24%, and 2008 S&P lost around 34%. And for Highfields to have done really well while Mr. Nanji was another director there, I think also goes to show maybe how his background has also proved himself why he could also make really good plays. And for his own hedge fund to have another 100 million into his on top of his $217 million investment on this company, I think that this could potentially be a really large play, especially in the upcoming year or so. But yeah, that's basically all I have for now. If you guys have any questions or comments, leave them down below. Well, that's all I have. Peace.